The Bitcoin idea is, what if I just had a good asset and I didn't have to trade it and I didn't need a company to tell me what to think about it? What if I just bought it and it went up in value every year? Right? So this is a big stack of complex, inefficient stuff, a lot of wasted energy. And this is one thing, very simple. That's why this goes up 50% a year and the S&P goes up 10% a year. And as people look at that, they'll realize I can get 10% performance with a stack of this inefficient, thermodynamically leaking Rube Goldberg devices. Or I can just buy this one thing, which is thermodynamically sound, which will outperform all this other stuff by a factor of 2 to 5 to 10 to whatever. And so those two dynamics, they'll go hard for the next decade. We will do that by buying Bitcoin every single quarter. Buy more Bitcoin, we'll buy it with cash flows. We'll buy it with debt, we'll buy it with equity, we'll buy it with any other capital markets activity that we can. Those opportunities will change from quarter to quarter, from time to time. I can't tell you how we'll be buying Bitcoin in 10 years, but I can tell you that we will likely be buying Bitcoin. Central banks, maybe in time, the smaller central banks will embrace Bitcoin as a treasury reserve asset. But long before them, I think corporations will, institutional investors will, sovereign wealth funds will.
Michael Saylor begins by discussing the trajectory of Bitcoin and its potential to be embraced by various entities over the next decade. He believes that while smaller central banks might eventually adopt Bitcoin as a treasury reserve asset, the real momentum will come from corporations, institutional investors, and sovereign wealth funds. He emphasizes that 10 years, though a significant period in our daily lives, is relatively short in the grand scheme of things. If Bitcoin reaches a value of $1 million per coin, it would surpass gold in terms of market value, yet still remain a relatively minor asset in the portfolios of the world's wealthiest individuals. Saylor's point is clear: even at such a high valuation, Bitcoin's journey would still be in its early stages. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Central banks, maybe in time, the smaller central banks will embrace Bitcoin as a treasury reserve asset. But long before them, I think corporations will, institutional investors will, sovereign wealth funds will. And 10 years is not that long a time in the history of things. I mean, if Bitcoin goes to $1 million, so it'll be somewhat more valuable than gold. But gold is still an insignificant asset. Gold is still an insignificant asset in every wealthy person's portfolio on Earth. So Bitcoin can go to $1 million a coin and be extremely successful, and it'll be starting to be embraced as digital capital, but we'll still be early. The Bitcoin idea is, what if I just had a good asset and I didn't have to trade it and I didn't need a company to tell me what to think about it? What if I just bought it and it went up in value every year? Right? So this is a big stack of complex, inefficient stuff, a lot of wasted energy. And this is one thing, very simple. That's why this goes up 50% a year and the S&P goes up 10% a year. And as people look at that, they'll realize I can get 10% performance with a stack of this inefficient, thermodynamically leaking Rube Goldberg devices. Or I can just buy this one thing, which is thermodynamically sound, which will outperform all this other stuff by a factor of 2 to 5 to 10 to whatever. And so those two dynamics, they'll go hard for the next decade. and they'll reform, they'll reform your industry, reform your job, reform the social order. The world seems very simple to me. It's like there's $900 trillion of wealth measured in dollars. The dollar will continue to expand 7 to 10% a year. That means in 7 to 10 years, there'll be twice as much of that. If Bitcoin, goes by a factor of 10 or a factor of 15, so it'll go from 1.3 trillion to 20 trillion, it could be 1% of the wealth of the world and be $1 million a coin, and the world will be whatever it's doing. Right, so I'm not really, I'm not of the opinion that there needs to be some catastrophe or there'll be some major, world
event
order change. I think that this is just good technology. It's going to spread just like mobile phones spread. MicroStrategy is a Bitcoin development company. So MicroStrategy's mission is to develop, advocate, support the adoption of Bitcoin everywhere in the world. So that's what we'll do. We'll do that forever. We'll keep doing that.
And you keep buying.
How will we do that? We will do that by buying Bitcoin every single quarter. Buy more Bitcoin. We'll buy it with cash flows. We'll buy it with debt. We'll buy it with equity. We'll buy it with any other capital markets activity that we can. Those opportunities will change from quarter to quarter, from time to time. I can't tell you how we'll be buying Bitcoin in 10 years, but I can tell you that we will likely be buying Bitcoin. We'll be supporting the education of Bitcoin.
Cool. Yeah.
There's 45,000 publicly traded companies. How many are on the Bitcoin standard?
One.
Every time I meet companies and CEOs, what do you think I say to them? I say,
buy Bitcoin.
You should recapitalize your company on Bitcoin. Well, it's deeper than buy Bitcoin. Buying Bitcoin is like kind of a shallow colloquial thing. Your company is currently capitalized on crumbling credit, right? The conventional wisdom in corporate finance is to capitalize a company using sovereign debt instruments, maybe T-bills. 3-month T-bills is the safest, but it could be capitalized on Argentine debt, Russian debt, Chinese debt, European debt. There's a lot of different things you can capitalize on. They're all crumbling 7 to 20% a year, right? So they're all defective. And conventional corporate finance is to take the position that we should minimize working capital, we should adopt a toxic capital asset, and we should avoid volatility. And the MicroStrategy philosophy is we should embrace volatility, we should accumulate capital, and we should adopt an accretive treasury asset, accretive capital asset. So we're attempting to reverse the polarity of every company in the world.
He also touches on the shift in investment preferences, particularly among younger generations. While equities and traditional assets were once the go-to for most investors, Bitcoin is quickly becoming a preferred choice. Saylor illustrates this with a hypothetical scenario. If a major corporation like Apple were to allocate a significant portion of its capital to Bitcoin, it would not only bolster the company's value, but also contribute to the broader adoption of Bitcoin as a corporate treasury asset. The discussion also delves into the volatility of Bitcoin and how it compares to traditional assets. Saylor explains that while Bitcoin's volatility may deter some investors, the potential returns far outweigh the risks. He argues that even a small allocation of Bitcoin in a portfolio could lead to significant gains. Moreover, by offering financial products like convertible bonds tied to Bitcoin, MicroStrategy provides a way for investors to gain exposure to Bitcoin's upside while mitigating risk.
I think the next 10 years are a very rapid transformation along at least 2 dimensions that I'm familiar with. There may be more than 2 that I am not familiar with, but the 2 I'm familiar with would be digital money and digital intelligence.
Yeah.
And it's pretty clear that there's hundreds of trillions of dollars of capital, which is analog money. And as people start to transform the analog to the digital, you're going to see profound disruptions in business models and financial applications and financial institutions, and a lot of things people took for granted for the last 30 years, they'll just throw out the window and say, what? Like if I run a survey on Twitter right now and I ask you how many of you are going to, invest in Bitcoin versus equities versus gold versus something else, I think like 3% of the people say equity. If you roll the clock back 20 years, it's like, well, like 3%, right? So there are certain things where people just don't think that way anymore. When Apple says, we're going to buy $10 billion of Bitcoin a quarter, and when Apple has $500 billion of Bitcoin and buys $10 billion a quarter, they will have capitalized based upon an accretive asset. Their stock will be more volatile maybe, and right, that'll be good for them, good for Bitcoin, right? So our mission is to drive corporate adoption and institutional adoption. It's not just the corporations, but also institutional investors, fixed it. The world's full of, there's a lot of investors that if you said to them, Bitcoin has a volatility of 55 and it has an annualized return of 50%, or 55% for the past 4 years. If you said that to them, and by the way, that's 5 times better than the S&P, do you want to buy it? Their answer is no.
Why not?
Because it's too volatile. Okay, or maybe I can buy 1%. 1% of my portfolio can be in that because it's so volatile. But if I said to you, I will give you an asset that's got a volatility of 10%, just like the S&P index, but a return of 25%, double the S&P index, they would prefer that. Okay? And so like when we create a convertible bond, we're creating a bond which has partial upside, some upside, but downside protection. And what we're doing is we're allowing people to scrape off a yield or a return which is much less risky or less volatile than pure Bitcoin exposure, right? And if, ironically, if someone would invest $1 million in an asset that gives you a 50% return with 50 vol, if you said, I'll give you 20% return with 10 vol, they'd probably give you $100 million.
Okay.
Right? If you said, I'll give you a 12% return with a 5 vol, they would give you billions of dollars. And you're like, well, it's not, I don't understand. Like, you're not getting that much money. They don't care. But you understand, that's if you look at the bond market, the treasury bond market, T-bills have a 5 vol, and their return after tax is 3%.
And they're a trillion.
And they're $100 trillion in it.
It's a trillion business.
So there's a lot of people that want low vol, low return. There's a lot of people that want mid vol, mid return, right? There's not that many people that want high vol, high return. But if I give you high vol, high return, and you run it through a heat exchanger, you can actually spit out any return you want with various mixtures of volatility.
Saylor concludes by highlighting the immense potential of Bitcoin in various market segments, from low volatility, low return treasury bonds to high volatility, high return assets like Bitcoin. There is a wide spectrum of investment opportunities. Saylor believes that as more investors understand Bitcoin's unique value proposition, its adoption will accelerate, leading to a new era of financial innovation. Please like and subscribe my channel.